Today, we are going to talk about an alternate way to fund your business. But before we do, don't forget, whatever platform you are coming from, don't forget to subscribe if you want to grow faster, if you want predictable growth. All right, so let's talk about this. A lot of people, you read TechCrunch, maybe you read some Twitter thread, and you often see what's going on. Companies are raising money. How are they raising money? A lot of it's coming from venture capital, private equity is another option, institutional investment, and then there's friends and family as well, right? Right now, like when I think about this, this is all that you see in the news because people are popularizing it, right? Because these are tried and true methods to raise money. The other thing I'll say is, yeah, there's the other way of just kind of bootstrapping, right? Sweat equity to get to the next point. So, why do you need to raise money in the first place? Well, in a lot of cases, you might want to build something really big. And a lot of these food startups, let's take for example, there was a food startup called Sprig. They raised about $45 million or so, and they were delivering fresh food. They actually ended up shutting down, but they had to raise $45 million because it's a very capital intensive type of operation. Now, if you look at Blue Apron, they were delivering meal kits and they went public. They're doing a lot in revenue. I think they're doing all the way up to like $795 million in revenue. And what happened to them was that they raised a ton of money, I think over $100 million or so. And now their business is, they're actually close to going out of business. They had to do a reverse stock split, which is actually fairly bad. That shows the business is trending in the wrong direction. I hope they make it out. You know, what I'm saying here is, again, capital intensive type of thing, right? So if you are doing something where a lot of people are going to be using it and it's going to affect a lot of people, like even the Bird and the Lime scooters that you see around the world, or or Uber, for example, right? You've got to have a lot of capital to grow faster. That you put fuel on the fire, and obviously, ideally, you raise money not just on an idea, but when you actually have a formula that works. So if you can put $1 in, you're getting $4 back, you have a formula, you just put fire on it, right? In some cases you can't do that, where it's just a concept and from there you can raise money. But not always. So you usually want to have some kind of idea that's already working, you have some traction, and you raise some money for it, right? So I want to talk about the context of what I'm doing for my company right now, ClickFlow, and we are raising money, and we're not going down the traditional route. The route that we're going down is through crowdfunding. So crowdfunding could be through something like Kickstarter or Indiegogo, but we're doing kind of our own crowdfunding round. And our deal basically right now actually expires end of October 31st. How we're doing it is we're requiring accredited investors to come in, right? So accredited investors need to be people that have liquid assets of a certain amount, or they're doing, like, let's say $200,000 a year in income, right? So crowdfunding is like this. So let's say we're trying to raise $2 million or something like that. And we offer our terms out there. We have a lawyer draw up the terms, and we put it out there for people saying, if you put in X amount of dollars, we're offering this amount of shares in the company. You can have a minimum check size. So people, for us right now, people are writing $5,000 to $10,000 checks for our SEO A/B testing software, right? So some people might write $20,000 checks, but the minimum is $5,000 and you have to be accredited. So you can decide if you want them to be accredited or not. Just for us, our lawyer told us that, and I'm not a lawyer, by the way, don't take this as this is entertainment value. Our lawyer basically told us that, hey, look, you should do accredited because that's going to protect you and prevent you from kind of getting thrown into jail. You don't want that to happen, right? So you want to make sure that people are getting verified. And we use a service called Verify Investor to check on each and every investor just to make sure they're verified, right? That way, kind of you're covered from any kind of issues that might stem. And so, what we're doing is, when you crowdfund, you want to set it for a certain amount of time. There's got to be a sense of urgency, and you can promote it to your email list. You can promote it to the audiences that you have, right? And then, we even have a little invest now button on the bottom of our ClickFlow website. We made a video describing what the software does, and then, our deal was promoted on a network where people can invest on, and there's deal flow in the back end. And I actually got grilled by someone asking me questions just to see how legit the company was. I had to show create some slides, show, with the traction of the company, where it's going, how big the market is, and I'm answering a lot of questions like Q&A on the forums. So there's a lot that goes into it, but at the end of the day, I don't need to go in the roadshow for venture capital where I might pitch, could be hundreds of investors, right? And believe it or not, Peloton, as of this recording, they actually went public today. And that guy, the CEO, I forget what his name is, but he burned through 400 investor meetings before he finally secured a round of funding. And he actually crowdfunded first on Kickstarter to get it going, right? So when you don't have investors that believe in you, maybe it's not the right type of people, because VCs want to put a lot of money into things. They have a different model. Private equity, they want to see a lot more traction, maybe more mature businesses. If you want to get started, crowdfunding is the way to go. Kickstarter, Indiegogo, those are certainly some things to look at. For us, we decided to use kind of an investment platform. So, for us, it's invest.clickflow.com for, those people that are interested in kind of going in and checking it out and putting money in there. So, for us right now, we've raised about $200,000. Our target is about $250,000. So we're not looking to raise a lot of money, But it's good because it gets us going and we can move a lot faster, right? Versus having to wait longer. So money, when you're ready, when you have something going, like, being able to focus on the company last couple of months, it's really moved us a lot faster, and like this thing is really starting to run, and we're super excited for it. So crowdfunding, check it out. I was kind of skeptical in the beginning, but yeah, it's working, and that's, we set our round to close October 31st. So again, you can check it out. Feel free if you want, invest.clickflow.com, to see how our crowdfunding page looks, to see how we answer questions, and then all the work that we put into it. Hopefully that gives you enough confidence to go to the next stage of your business if you decide to raise money. So let me know if there's any other types of funding that you think is good for businesses, or if you have questions on it, drop them in the comments below if you're watching on YouTube. And if you're watching on YouTube, don't forget to check out the next video over there. It's going to be amazing. And whatever channel you're coming from, don't forget to rate, review, and subscribe. It helps us grow. We'll see you tomorrow.